Hey there everyone, welcome back to the channel where we break down all things taxes and money so you don't have to pull your hair out come tax season. If you're new here, make sure you hit that subscribe button because today we're diving into a topic that might seem as exciting as watching paint dry, but trust me, it's critical if you want to save big on your taxes. So you're probably here because you've heard about standard deductions and itemized deductions, but you're still wondering what the heck is the difference. Well, you've come to the right place. We're going to break it all down for you, what each one means, how they affect your taxes, and most importantly, which one is going to save you the most money. Now don't worry, we'll keep things light. No need for tax jargon that'll make your head spin. We're here to make it fun, easy, and understandable. And hey, if you enjoy the video, don't forget to like, comment, and share. I want to hear your thoughts. Do you itemize or take the standard deduction? Let me know in the comments below. All right, let's kick things off with the standard deduction. This is the easiest option you'll come across when filing taxes. The standard deduction is a flat dollar amount set by the IRS that you can deduct from your taxable income. You don't need to keep track of receipts or expenses, it's just there, like a freebie that the IRS gives you every year. So what's the catch? Well, there isn't really one. Besides the fact that you can't deduct anything else if you take the standard deduction. If you're looking for simplicity and no stress, then the standard deduction might be your best friend. For the 2025 tax year, the standard deduction for single filers is about $15,000, and for married couples filing jointly, it's $30,000. That means if you're single and your taxable income is, say, $50,000, you only pay taxes on $35,000 after subtracting that standard deduction. Simple, right? Now here's the kicker. There's no paperwork involved. You don't have to track every pencil, every receipt, or every cup of coffee you bought in the last year. It's just a clean, easy amount that the IRS gives you. And here's where things get fun. If you have a lot of deductions, we're talking things like mortgage interest, student loan interest, charitable donations, medical expenses, then the itemized deduction route might actually save you more money. Now let's talk about itemized deductions. This is where things get a little messy, but in a good way if you've got those deductions that can add up. Itemizing means that instead of taking that flat standard deduction, you list out all of your eligible expenses and subtract them from your income. This can include things like mortgage interest payments, medical expenses if they exceed 7.5% of your income, charitable donations, state and local taxes up to $10,000, student loan interest, business expenses if you're self-employed. If these itemized deductions exceed the standard deduction, then boom, itemizing is the way to go. But remember, you need to keep track of everything. That means receipts, documentation, and making sure you've crossed your T's and dotted your I's. Imagine itemizing as a giant tax puzzle. You can't just throw pieces together. You have to know which pieces fit. But if you do it right, you could potentially save a lot more money than you would with the standard deduction. One major downside is that it's time-consuming. You'll spend more time organizing all those receipts and paperwork. But if you're in the position to save, the effort can be worth it. Okay, so when do you take the standard deduction and when do you itemize? Let's start with when the standard deduction is your best friend. You'll want to take the standard deduction if 1. Your total deductions don't exceed the standard deduction amount. 2. You've got a pretty straightforward tax situation, not a lot of complicated deductions. 3. You don't have huge expenses for things like medical bills or mortgages. If you don't have tons of complicated tax stuff, the standard deduction is the way to go. It's simple, easy, and stress-free. And who doesn't want that? Now here's when itemizing is worth the extra effort. You should consider itemizing if your deductions are greater than the standard deduction. You've had major medical expenses like hospital bills. You've made charitable contributions or given large gifts. You own a home and pay property taxes or mortgage interest. That's when the real magic happens. Here's a little trick. Keep all your receipts for charitable donations, medical expenses, and anything else you might think could be deductible. A few extra $100 can make a difference when you're itemizing. Plus, if you have a high income or live in a high tax state, itemizing may really pay off. So let's recap. Standard deduction is super easy. You don't need to keep receipts, and it's a great option for people with simpler tax situations. Itemized deductions are more work, but can save you way more money if you have big expenses like mortgage interest, medical bills, or charitable contributions. Remember, it all comes down to your unique financial situation. Don't just blindly choose one or the other. Take a moment to calculate your options and see which one works best for you. If you're unsure, it's always worth talking to a tax professional who can help guide you. All right, now that you've got the lowdown on standard versus itemized deductions, it's time to hear from you. Are you going to take the standard deduction this year, or are you getting your itemized deductions ready? Drop your thoughts in the comments below. I want to know. And don't forget, if you like the video, make sure you hit that like button, comment with your favorite tax tip, and share this video with anyone who's still scratching their head about taxes. It really helps the channel grow and helps your friends make better tax decisions too. Thanks for hanging out with me today, and I'll catch you in the next video. Until then, stay smart, stay organized, and remember, taxes aren't as scary as they seem once you understand the basics. See ya, like, comment, and share. Your engagement helps us create more awesome content, and it helps others navigate their taxes with confidence.